everybody, it's your girl here, Breanna Colón, and welcome to another podcast episode, Your Life, Your Money, with Breanna Colón. Today, I have a very special guest, and he owns his own agency. It's called the Smith Firm and Agency.
That's what it is.
That's what it is. That's what it is. I'd like to introduce you to Dr. Tyrone Smith. Could you say hi to me?
Hey, everybody. How we doing? And glad to be here. Thank you, Breanna, for the invitation. You're long overdue. I should have been here long before now, but we're not going to talk about that.
That's my bad.
We're not going to talk about that. We're here now, and I'm delighted to be here. Delighted to be here.
Happy to be here. So today, guys, we're talking all about auto and home insurance. That's what we're talking about today. There is a lot that I have seen in working with my clients that has come up as question marks, and quite honestly, sometimes they're just paying too much. Sometimes stuff that comes up with claims, just all kinds of questions that have come up for auto insurance.
Yes.
And so I wanted to really take a deep dive today with Tyrone to really kind of help us to get a better understanding, really, quite honestly.
Yes.
So
Yes.
I want to start with just the fact that it's important. One of the things that we recommend to our clients is to work with a broker versus working with an insurance agency.
Absolutely.
So what's your take on why someone should do that?
Well, first and foremost, the reason why is really very easy. A broker is someone who is not captive to one specific carrier.
Mm-hmm.
When you are speaking with an agent that is captive to one agent or one agency or one carrier, the problem with that is that the only products and services that can be offered are exclusive to that carrier and that carrier only.
Mm-hmm.
Your situation may not grant you what you need with the one carrier.
Mm-hmm.
You may need more diversity. Well, if you need diversity and you're speaking to a captive agent, well, the captive agent has shot his shot.
Mm-hmm.
Ain't nothing else he can do for you.
Mm-hmm.
But with a broker, which is what the Smith Firm and Agency is, it is having a conversation with one agent who is available to quote you through 23, 30, 40 different carriers simultaneously.
Mm-hmm.
By the way,
How do y'all do that? Wait a minute. You said simultaneously. So you got a system.
we have a whole system,
Mm-hmm.
a whole system. So when you contact, or let's say you visit the site. So the site address is www.thesmithfirm.agency.
You see how you got right to it, right?
Got right to it. You got to get that right in. So you go to the site. Now, first thing you go to the site, you'll see, Goosehead Insurance, Smith Firm, and Agency.
Mm-hmm.
Goosehead Insurance is our parent company. It's the franchise that we are under.
Okay.
When you go there and you submit your information, that information will come to us immediately. The moment you hit submit, we get it. Mm-hmm. When we get the information, we immediately take that information and we plug into our artificial intelligence.
Oh, there's that AI thing.
It's that AI thing.
Okay.
Now, that AI thing has a lot of positives and negatives, but the positives and negatives is not about AI.
Mm-hmm.
The positives and negative has everything to do with the person that's operating.
Gotcha.
So we want the technology.
Right.
Honestly, we want it.
Okay.
There's no refuting that.
Mm-hmm.
It's no different than the advancement of technology and cellular phone.
Mm-hmm.
We would have said all day long that the analog phone is all that we need until that digital phone was introduced.
Right.
And I promise you, in the technological advancement of technology with these phones, there's no way. We would hate the digital phone. The analog phone. We would hate it. So we plug that information in. Mm-hmm. When the information is plugged in, instead of our agents picking up the phone and having a conversation with 23 carriers auto and 44 in home, that information automatically goes out, and within minutes, we get back all the data.
Okay.
in minutes.
That's awesome.
Then when
That's
we
a
get
very efficient process. But
I mean, super efficient, because you and I both know that in this age of evolution in business, time is everything.
Right.
So because of it, we got to make sure that in our servicing, we got to take in consideration the time that it takes to service our clients.
Right.
Right.
Well, we're in microwave society, so everybody wants everything now.
They want it now.
Can you give me a quote right now? I don't want to be waiting 2-3 days for you to get back to me, type of thing.
And there's really nothing wrong with that, but you do have to be careful, because all clients aren't created equal.
True that.
Because there are always a differentiation of things that are going on. There's a lot that goes on to that, and we'll get to that. But when the information comes in, you're talking about getting a quote, one quote for a specific client that has touched 23 to 40 different carriers. Do you know how long it would take the average client to have a conversation with just 5 carriers? After you go through all the prompts, press 1.
Oh my goodness. Don't get me started on that.
Press 1 if you have blue eyes. Press 2 if you have green eyes.
Right.
Press 3 if you have long hair.
Right.
Press 4 if you have short hair. Press 5 if you can wait now. Press 6 if you need it later. So, I mean, there's a whole lot that goes on with that. Right. So, and it's funny that I would say that, because I made an early decision with my firm that I would not use that system. I don't want to use that system. I want it so when the clients call, they're going to hear a human voice. Yes, I understand in the evolution of customer service and being able to satisfy clients, sometimes that could delay process. But I just think that the overall consensus is that clients at times feel frustrated that before I even be able to really give you my information, I got to go through 9 prompts.
Yeah, that gets on my nerves. I can't tell you how much that gets on my nerves.
So that's the reason why we chose not to do that. So when we had that information, now we analyze it, we compare the rates, we look at what's the best coverage is, and once we're satisfied with what we have found, we will email, text, and call the client, so that way we can then have that conversation.
Gotcha. So is a credit pull required now for getting auto insurance?
That has always been the case. And I know you all have heard all of these myths, and boy, we're going to talk about all the myths.
Why you got to check my credit for you to insure my car? What does one have to do with the other?
Yeah, well, let me just clarify the Cinderella that's in the room. So, it would be the elephant. But since we're going to talk fantasy.
Thank you for making me the Cinderella and not the elephant.
Cinderella in the room, okay?
Situation, right. Yes.
Your credit does play a role. Why? Because just like anything financial, anything that has anything to do with financial, I promise you at some point, your credit worthiness has a lot to do with it, especially when someone is writing risk on you.
I don't think people are thinking that deeply about that. They're just thinking on the surface level of, dang, I got a 600 credit score. And how does that affect? So what's like the credit criteria?
It's a soft pull. So the reason why many people have never known is because it's not a hard pull to the credit. It's a soft pull to the credit. And really all they're really looking to see is not necessarily how you actually handle money. It's one of a few times where you get a pass when you don't pay your bills on time. Although we're not encouraging you to pay your bills on time, or not to pay your bills on time. We're encouraging you to do that, but in this case, it does not hurt you as much. But what they are looking at is the longevity of residence. They're looking at the longevity of driving record and history, which ties into the MVR. Right. MVR is an acronym for Motor Vehicle Report. All of that's tied in there. The money part of it, or how you pay the bill, is actually very, very low. It's not as involved as they are looking at other factors when it comes down to your credit.
Does the score itself matter? The
score does matter, but not as much as if you were buying the car.
Right. So what would you say, what scenarios kind of constitute we don't know if we'll insure you, but you're going to be definitely at a higher rate. Like we know, okay, the low end of the spectrum, but like what's the middle range,
you know? If you have a low credit score, yes, it will affect you. Yes, it will. It definitely will. But there are other factors that where the score may be low, you could actually get a better rate because you may have a great driving record. Your great driving record actually counts as a layer up to your bad credit. So it's not totally going to hurt you, but you don't want to just negligently just keep your credit in the low 6, low 5, a high 5. That should never be your ambition. Always pay your bills on time. Always know that someone lending you anything, the least that you could do is manage whatever you're getting from that individual, manage it appropriately, because that determines how you're going to get more.
Come on here. So is there a certain credit score that you would say, like, at minimally you need to at least have an X in order to not get dinged? I know it's not just based on the credit, or it's hard to say because it's a mix.
Don't be satisfied hanging around in the low 6. Don't be. If you're going to be in the low 6, you better not have 3-4 points on your driving record. You better not have had 3, 4, 5 claims over this period of time, because I'm telling you right now, when you get that premium back, when they give you that quote, you are immediately going to reach for your nose, because you're like, oh my goodness, I think my nose is bleeding. Because it's going to be high. It's going to be high. And the other thing that you want is you really want to have a real conversation with your agent. Know your agent, ladies and gentlemen. The same way you have relationships with your financial advisor, you want to have a relationship with your agent, so that questions that you are mythically trying to answer in your head, you can actually literally answer over the phone. How about that?
Right. Yeah. Relationship is everything when it comes to these type of things. There's so many clients that are loyal to a fault, really, to their insurance company, where, I've been with such and such a company for 15 years. And so if I bring up like, hey, I think you might be paying too much or whatever, or I want you to at least get a comparison, because there's always pricing differences in sales and all kinds of things that may cause the pricing to shift. So you having this policy for so long, you might even be missing out on things that have been added to policies that you didn't know about because you've been stuck over here in company A for so long.
Oh, we're going to talk about
and
that
so,
today.
The loyalty, for some clients, it takes a minute for them to get past the loyalty. And I'm like, well, how loyal are they being to you? They're not as loyal to you as you are being to them, just because you've been with them forever. Like, what?
They don't want to know the truth. They don't want to know.
Well, wait a minute. When the insurance costs went up, because mine is one of them. I'm not going to name my company, but my policy went up a couple $100. When I asked the agent about it, the response was, overall the industry had an increase of about 20%. What? Loyalty. What? Loyalty goes out the window when it comes to that, because now I really see that you're not really looking out for me. You're looking out for yourself. And, I didn't do anything to raise the price, but the price went up. So I'll give you an opportunity to speak to that on, pricing going up and people being loyal to their, their companies and all of that. Yes. Go have the floor.
May I? Let's talk about loyalty. Are we loyal to the client, or are we loyal to the money?
Well, that'll preach right there.
Well, there's 2 different ways you can look at that. If I'm loyal to the money, then there's this saying that we're chasing money.
Right.
But for those of us who understand the value of having a relationship with the client, if I service the client well, isn't there a possibility that the client, who in an exchange of loyalty, will actually send you more people?
Absolutely.
So if I'm loyal to the money, and in the loyalty to the money, in your case, policy goes up, and now the client who once felt warm and fuzzy about this relationship no longer feels warm and fuzzy, then that possible client that you were chasing money and not chasing relationship will go out the door.
Absolutely.
So then the chasing of money is really not a good, efficient way to do business.
Yet it's done every day. How about that?
It's really not a good way to do business.
It's not.
No real business of any long-term effectiveness and relative to any era has been in business just because you chase money. Mm-hmm. Mm-hmm. No, you got to chase relationship. Relationship still is the best way to grow business. Now, let's address that. In scenario A, this is how I'm going to speak of you in a third person, like you're not here. Client A says, wow, my rate went up $200, $300. Mm-hmm. Client A calls the agent and the agent says, oh, well, we've had an increase in what's happened in society, 20% increase. Mm-hmm. Now, when they say that as the client A will look at that and say, well, I can't really blame anything that's happening in society. I mean, I can't raise my voice and say, come down 10% so my rate can come down. Right. Mm-hmm. So it's really you can't say anything against that. Mm-hmm. Right. However, I'm going to now speak to that myth. I need everybody to turn up your volume. I need you to come very close so I can tell you a secret. This secret, you're going to thank me for a very long time. Breanna, I'm going to ask you a question. When you asked me when a quote is being given, is the credit pulled? Right? I said yes. Mm-hmm. It is factored in.
Right.
Breanna, is it safe to say that when you initially got your auto, your home, whatever, financially, you were at a certain place? Mm-hmm. Is it possible that in the duration, 6 months, 12 month, which is typical to the auto and even the home, that's typically the term before renewal. Mm-hmm. Is it safe to say that your financial situation could change within the term that you had that policy?
Yep.
Is it safe to assume that if it changes, and this is the secret, does the system, like any other system that is used in obtaining your information, does that system know that you've actually changed in your financial situation?
No.
How would the system know that your financial situation has changed?
Well, now credit-wise, they could know if they pull another soft pull credit.
If they do what?
If they pull the credit again.
Could you move up into the mic? Because they need to hear that.
Mm-hmm. If they pull the credit again, they can see that the person may have added.
And who would be responsible for pulling that credit?
The insurance company.
Oh, so that means the increase that's happening has more to do with an agent who's chasing money, not chasing a relationship. Because sometimes the increase could be modified if they simply rerun the quote.
That's good.
Rerun the quote because your situation has changed. Right. Do you know the points on your license that were there have now come off? Your credit score that was this has now gotten better because I sat with my financial advisor. I'm actually making more money. All of these things are factors, and those factors can change within a term. The reason why an agent won't do it, because every time you pull that credit, it costs the agency money.
True that.
So that means the relationship that they're so loyal to, most of those companies are not loyal to them at all. They're going to look at every little way that they can to save money. And even though pulling that credit is not an astronomical amount of money, it's still money. They would rather use an excuse and make you pay the increase, which puts more money in their pocket, than to rerun the quote. Notice that, wow, instead of a 20% increase, it may only be 8%.
Ooh, that's good right there. Let me repeat that as the consumer listening. So basically what you're really saying is if I'm not happy with my rates, I need to, and the agent is not willing or has not volunteered to rerun my
There
quote,
it is.
then I need to seek another agent because he's not looking out for my best
Not
interest
looking out for
anyway.
you at all. I've told clients who contacted me who thought that the quote that I gave was high. I said, okay, contact your insurance agent and have them rerun your number.
Mm-hmm.
See what response you get. I had a client to do that while I was on the phone. Mm-hmm. She got on the other line, called her agent and said, I want to request to have my insurance. I want to rerun my quote because I think I can get a better rate. The agent said, we don't do that.
No, we don't do that.
Whoa, we don't do that. She said, excuse me? She said, you're telling me you would not run my quote again to see if I could actually get a better rate? He said, oh no, I've never even heard of anything like that.
Wow.
She said,
wow.
Thank you very much. Click. She said, I will be doing business with you from now on. I'm sending you my sister, I'm sending you my aunt, and I'm sending you my grandmother. Now, because agent A chose to be relational, not chase money, challenge client A to contact her agent B to see if he was going to be relational, found out that he was not going to be relational, hung up the phone, and now decided to do business with agent A. And subsequently, I gained 3 other clients. So tell me whose method works.
So the bottom line is, if you're not happy, if your insurance has gone up and you're not happy with the increase, you need to be reaching out to this guy right here to get a quote. The quote is free. The quote is free.
Can you say that again?
A quote. We like free stuff,
we
right?
Like
Don't
free. We like free.
F-R-E, free. So yeah, free stuff. The quote is free. So it doesn't hurt. And he's a broker, so it doesn't hurt to be able to get the information and compare it, which is what we tell our clients to do anyway. Don't we shop for
everything else?
Yes, we do. That's what we tell our clients.
We stand in the store looking at the price, and we'll go to Amazon while we're in the store.
I sure do. I sure do.
Let me see if that price is good.
Right.
Well,
right.
do that with your insurance company.
Right.
Nobody said that was illegal.
Yeah. Sometimes, though, we get comfortable, going back to the loyalty thing, we get comfortable and we don't want to do the work required to see if there's something better out there. And so, that's why when, with our clients, we absolutely tell them when we're evaluating expenses and how can we help you to cut costs here and there. We're looking at auto insurance. And my first question is like, hey, what's your deductible? Which we'll get into deductibles discussion in a minute.
Yes, indeed.
But, I ask about that and ask about, how much they're paying and all that kind of stuff. But then I'm like, okay, let's see, how long have you been with the company? And then let's see, because you might be paying too much. And I do tell them, get a quote, find out from your current insurance company, what would be the new price if you change certain deductibles. And they'll check with that. And then I have them compare it and have them get quotes from you. Sometimes other brokers just, in general to do their homework, which empowers them as a consumer. We've got to become more empowered as a consumer to do the work in order to protect ourselves.
Absolutely.
From just getting, dumped over and not having a proper relationship and working with agents who are just most interested in the money.
Absolutely.
So this is all good stuff, but I'm going to pause this right here so we can take a quick break. We will be right back. Juicy conversation. All right?
Just when you thought everything was good, your rates have gone up and now you need auto insurance. Too many tickets, accidents, buying a car. With the Smith Firm and Agency, you can pay today, get covered today. Fast, easy, affordable. Over 23 carriers and instant quotes. Click the link. Get covered. Drive smart. The Smith Firm and Agency. We're a standard of excellence.
I am Breanna Colón, your host of Your Life, Your Money. And with me today is Dr. Tyrone Smith, founder and owner of the Smith Firm and Agency.
Yes, ma'am.
And today we are talking all things auto and home insurance. And he has been schooling us, as people say, on today. He's been schooling us about the different intricacies and details about things that go on with the auto insurance. And so one of the takeaways that I already wrote down that I want people to make sure that they don't miss is about not settling for a higher premium.
Yes.
If they decide to go up on your premium, you don't have to just be like, well, they went up on my premium and you just settle for it. You can actually do something about it and take a proactive approach. And so what we talked about earlier was getting with a broker such as Dr. Smith to allow them to run a quote for you to see, based on your now situation, because if your financial situation has changed for the better, then you would want to have your insurance quotes rerun because you may be able to get a better rate. But that also suggests that works in the opposite, that if your credit has gone in the other direction, then try to your best not to get a rerun of a quote. Or,
it could hurt you.
It could, exactly. So I want to switch gears and talk about deductibles on the auto insurance, because one of the things that we recommend is depending on how much money the client has. Because of course, for us, we're helping them to get into a better place financially under my firm. And in doing so and working with our clients over the months, some of them come in with no money in savings. Some already start with money in savings and we're just adding on.
Right.
And so to me, when you're broke, you need your insurance deductible to be as low as possible, because if you got into a car accident, you may not have the $250 or the $500 or whatever in order to pay the deductible. But as my clients have a set amount of money, or they have, several $1,000s in savings, we advise them to increase their deductible and not give this extra money to the insurance company, especially if they have had a good driving history. And, and I've also told them not to sleep on the price difference, between one deductible to another. So maybe the increase is $20 or maybe it's $15, and sometimes people can sleep on that. Oh, well, it's just $15, so I just went on and kept the lower deductible. It's not just $15 or just $20. Over time, when you think about how old you are today and how long you plan on driving, between now and then, that might be a good 30, 40, 50 years. Absolutely. Now take that $15 a month savings and times 12 times that number of years. Now tell me, are you really saving money or are you not? You're absolutely going to be saving money over time. And so that's really, 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 really important. So we're usually on them about that because people just naturally go with a $250 deductible or a $500 deductible. And my point is that if you got into an accident, that is considered an emergency, and that is what we say for emergencies. So we tell them, get a higher deductible. So I want to let you speak to that because one more thing I'll add before you speak on it is I've also noticed that it seems intentional, and you can tell me if this is true or not, that the insurance companies purposely don't make a huge increase. In price difference between 500 and 1,000 on purpose to keep people in the mindset of, I'll just go with the lower deductible because then the insurance company makes more money over time. As opposed to if they, go with something higher, 1,000, 2,500, whatever, then of course they may see a bigger break. Now, go ahead.
Well, a lot of what you said is exactly what's going on in the mind of most consumers. A lot of it has been pre-programmed. It's a feeling that generically the default deductible is $500. That's kind of sort of what has happened in the minds of people. Only people who have explored other possibilities will even know that deductible can actually go higher. Many people don't even know that because they've never raised it. They've never raised it.
Right.
And they've never known the benefit of doing it. But now let me go a step further and now release the second nugget of this session that we're having.
Okay.
Because this second one,
all the nuggets, is some barbecue sauce.
Yeah, I'm talking about this is saucy. Because this one is real good.
Okay.
What if the whole deductible conversation really is a void conversation anyway.
Okay. Do tell.
May I? May I? Ladies and gentlemen, let's look at every driver. Let's look at you. Let's look at you that you are a model citizen. Let's look at you that you have been driving your vehicle as a safe driver for the last 5 years, 10 years. Let's say you've only had one accident in that duration of time. And let's say you may have only had 2 speeding tickets, not the ones that you get caught on the camera, but that's a whole nother conversation. But I'm just saying that record wise, you really are a safe driver. You're not driving on the road like you're driving in the Daytona 500, like you're in the Crash of Derby. You're really a very, very safe driver. Breanna, do you know most people don't know that the deductibles of your comp and collision is if you cause the accident?
Right.
If you don't cause the accident, the deductibles aren't even applicable because their insurance is going to take care of everything.
Right.
Right? So if you're a safe driver and you've known that you've not had an accident and you're not out driving like that, and typically you know that if an accident is going to be warranted of any kind, you are probably not going to be the cause of it. Well, if that's the case, why are you giving all that money to your insurance company?
Right. Precisely my point.
Why? May you offer your reasoning as to why you would not raise the deductible to $1,000, $2,000,
Right.
because if an accident happens, you're not typically going to be the one who have caused it.
Right.
If that's the case, ladies and gentlemen, you have no idea how much money you are actually going to save by just raising your deductible. Because the higher the deductible, ladies and gentlemen, the lower the premium will be. Now, there is one caveat, and it's a very important one. If you are still paying a creditor for your car, the banks will typically not allow you to raise the deductible above $1,000.
Interesting.
Yeah, they won't allow you to do that. They will, and when they find out, they will send you a very nice, nasty letter saying you need to bring them deductibles back down. Now, it all depends on your creditor, because what I have discovered, when you're dealing with second chance lenders, they typically act that way. But when you've gotten loans from your standard credit union, banks that you have relationship, there's that word again, they typically don't care, because in their mind, long as you're paying that payment and paying it on time, they don't mind. So again, this is another reason why in the deductible conversation, please understand how your policy really works. Understand that those coverage limits, the 50s, the 100s, the 100s, the 300s, the 250s, the 500s, are all in place because if you cause the accident, there has to be buckets of money that are applicable to indemnify or to bring someone current to their financial situation previous to the accident. That's what that's for. But if you're not causing the accidents, ladies and gentlemen, it's their insurance company that's actually paying, not yours. So all of this is important.
Right.
All this is important if you're looking at the total saving, becoming a more frugal consumer, understanding the powers that you have, knowing the benefits that you have. I mean, when you look at, some people don't even really know how their policy works. And I've had many conversations with people, and I've said certain things because I know how to say certain things without insulting my client, but actually testing their knowledge to see if they really know how the policy really works.
Right.
Because
so don't quiz me today, but go ahead.
No, I'm not going to do it. Not do it. Not going to do it.
I might flunk that test. I don't know. I mean,
but I want my firm wants the best for the clients.
Absolutely.
We're winning. We're winning. Even as I'm having this conversation, we have expanded. We are expanding even more. We're bringing on more agents. I'm grateful for the partnership that you and I have. Shout out to Breanna Colón and Tyrone Smith collaborating to work together to bring you a better consumer experience.
Amen.
We're working together to really put the power where it belongs in their hands.
Right.
We service them. We're in business because of them.
That's right.
We're winning because of them.
Customer first.
So if we know that, isn't it to our benefit to do everything that we can to make this the best experience that you have? Isn't it wonderful to be able to pick up the phone and know your agent by name? That's a wonderful feeling.
Right.
And it's wonderful when you share that with your children who are coming in this mad world of all of these changes and all this stuff that's happening. But you can tell your son or your daughter, hey, call Mr. Smith and, you're going to go ahead and get added to that policy. And the agent's going to have that conversation with your child, just like they had that conversation with you.
That's usually how it goes with life insurance too. That it becomes a family affair, once they trust you and they know that you're looking out for their best interest. That's really the bottom line, whether it's, like you said, relationships, whether that is the plumber, the AC guy, the real estate agent, the mortgage person, relationships are everything.
Everything.
So I want to switch gears to homeowners insurance before we run out of time.
Let's
we're probably
talk
going to have
about
a part 2 on this. But
let's talk about it.
I'll start with deductibles because we also, our team also advises our clients pertaining to home insurance that the same thing, that if when they have a certain amount of money saved, hey, look, you're not broke anymore. So why are you having this low deductible? And so we tell them, depending on how much money, the answer varies based on how much money they have, but basically increase that deductible so you're not paying so much. And sometimes it's also just about paying attention, because I've seen where a client will say, well, yeah, my mortgage went up $200, it went up $300 or whatever it went up per month. And some of that is, of course, because of the property tax increase, but some of that is also because the homeowner's insurance went up.
Absolutely.
And you just weren't paying attention and didn't realize. So don't gloss over that if you just see, because out of routine, you're used to your mortgage payment going up every other year. Take the time to break down that mortgage statement and see, where is this increase exactly coming from? Is it just the property taxes, or is it also my homeowner's insurance? And if so, I need to be giving them a phone call. Hey, I see my policy went up. What's going on? I didn't have a claim, but why is it going up? Get some answers on that. And then once again, like he said earlier about getting a requote, what I would assume the same would apply to homeowners insurance.
Applies.
Get a requote so that you can take control of that situation as a consumer and not worry about being loyal to any one company. Oh, that's the other thing. Sometimes I've had clients that they don't mind making a shift, but they're so loyal and so nice about the company they're with that they're concerned about it being in the middle of the policy year. Oh, well, the policy is not over till June. And I'm like, they can make adjustments in February, March, April, May.
Let's talk about that. Go ahead. Because, ladies and gentlemen, just so you know, auto and home, this is applicable to auto and home. When there is a change in the policy, auto, when the change is made, Breanna, they're actually going to get a refund from their previous auto insurance because the premium that's remained on that policy is owed you. So they actually will send you a refund based upon the term that's actually remaining.
Right.
Okay. Now, in home, it's the same thing. When the policy is written in the middle of the term, you're going to get a refund check back from your insurance company for the remainder of the money that's in the term of your homeowner policy. Now, ladies and gentlemen, listen to what I'm going to tell you. When that happens, that is not for you to go shopping.
Well,
okay. Though that is not those are not new Gucci boots. Okay. That is not for you to go and get those Louis Vuitton, whatever. That's not that. All right.
Right.
What we need you to do is when the check comes, do the one thing that Breanna, myself, and all of our firms are trying to get you to do. Hold the money. Don't spend it.
Yep.
I know it's burning a hole in your pocket. I know the stores are calling you by name. I know that there's a feeling that there's just this thing on Amazon that you've been looking at every day, but don't spend the money. Because when the policy is rewritten, your policy is actually paid out of the escrow of your home. That escrow pays two very important things. It's paying for your taxes and it's paying for your homeowner insurance. Now, this is only applicable if there is still a mortgage on the property.
Right.
If it's not, then there could be variances in what I just said. But typically, when the normal situation, when there's a mortgage, this is what that is being used for. Now, when the policy is rewritten, remember, the money came out of your escrow. Your homeowner insurance is paid for annually. So any monies that were paid, it came out of the escrow. Now, the object is to reduce the cost of the insurance. If there is a reduction, what I need you to do is contact your mortgage company. You will ask them to do the calculation to determine if the escrow account has enough money in it to support the new policy. If so, don't spend it. Consult your financial advisor, who will then advise you as to what you need to do. Yeah,
absolutely.
We're not, again, I do not need you to run off to the mall. Okay, hold on a minute. Let's hold on. Let's look to invest that money. How about that?
Or they may need to put it back.
Or put it
escrow.
back in because there's not enough money to cover the new policy.
Right.
You may need to put that back in there. All right. So let's be smart about the way that we're going to do this. Now, I want to speak to a requote in homeowner. Another reason why you really don't want to do a requote in homeowner, because a very unique thing happens with homes that don't happen with cars.
Okay.
Homes appreciate. Cars depreciate. So when your home has now taken on an additional $50,000, $100,000 of equity because of this marvelous home, what's happening with the homeowner and the mortgage rates. Okay, well, when that money now magically has given you more value in your home, well, it's actually going to cause your insurance to go up too. Yeah. So what you really want is an agent like the Smith Firm and Agency. Visit us at www.smithfirm.agency.
You better give that plug.
What you need to do is have an agent who will take the time to actually look at your listing, see that that has happened, and because all agencies will actually receive a report from the carrier if, in fact, an increase is coming.
Interesting.
Yeah, it's never a secret. It may be a secret to you, but it's not a secret to us. We're getting all the data. We know that the increases are coming. We know it's coming. And what they typically do is they say, ooh, increase is coming. Money, 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 money.
Right.
Because they're looking at the more money they're going to take in. They're not looking at how much money they're going to try to give you.
Right.
Or to try to save you. And even in the deductible, sometimes the best way to offset what has happened is to look at the deductible, raise the deductible, but always make sure that you are financially in a position that any catastrophic events that could happen to your home, you want to be in a position that if you need to file a claim, that you can pay the deductible, because no anything is going to be done until that deductible has been paid. So and the only way, now there is one way that changes. is if the damages that have happened to the home, when they look at what the claim will be, if there is a large payout, what they may do is make a modification and say, we'll take the deductible out of the claim payout. So that way you don't have to pay it out of pocket.
Right.
So there are ways, but you have to have that relationship. You have to know how that works. You have to have a conversation. And all claims are not created equal.
Right.
Which we would definitely have to do a part 2, because we're going to have a very engaging conversation to the differentiation between flood and water backup.
Okay.
And for those of you that are in Florida, you may want to tune in when we have that conversation, because that conversation is applicable to what's going on right now.
So you mentioned something, and I should have written it down, but you just said it a few minutes ago about the homeowner's insurance and the deductibles, about getting a requote. I've forgotten now.
Yeah, because the requote, see, unfortunately with a home appreciates. So there you're actually gaining more money in that home.
Right.
When the home value goes up, well, they're going to be making changes to the policy. They have to, because there's this thing called the RCE. It's the replacement cost estimate. The replacement cost estimate is the estimate that's factored in the policy that if something should happen to that property, the actual structure, that specific bucket of money is designated based upon the value of the home and what it would take based upon current value to replace your home. And it factors in inflation of parts, inflation of materials. And that's why typically the replacement cost is 80% of whatever the actual cost of the whole policy is in terms of face value. It's 80%, because it's going to take about that in order for to replace if something should happen to that full structure.
Right.
So there are a lot of things. And then we need to have a conversation about looking at that. Do you know what those buckets of money really mean? Do you really know what that means? And is it a myth? Is this a myth or is this real? If I go to your house, or, the story's been told, we joke about it every time there's a major snowstorm, and we've used it as an excuse to make our children go shovel the snow, that if somebody slips and falls on the property, you could be sued. Well, the question has been posed, is that real or is it fake? Well, ladies and gentlemen, I want to tell you live on Breanna Colón's podcast, that's real. That is real. And it can happen more often than you think.
Oh, I'm sure. And
it's more than that. Dog bites. As a matter of fact, this is something that I need to tell your audience, because this is very serious. We don't know how serious it is, but it's very serious. Client A has a pool in their backyard. Client A has no fence. Client A has parties. Client A is turned up. Client A is enjoying the pool because Client A, in the eyes of his or her constituents, is the bomb.com with no alarm. It's all things we going over Client A house because Client A is got that house with that pool with the gazebo and it's nice. But Client A ain't got no fence.
I thought that was a requirement now, that you have to.
It is a requirement, but just because it's a requirement don't mean everybody do it.
Well, that's true too.
Well, now.
That's true too.
So no fence, or the fence is not adequate. Client A's neighbor's child wanders over into your property. Child is intrigued by Client A's pool.
He jumps in.
Jumps into the pool. Jumps in the pool and drowns. Client A feels so bad because Client A's neighbor child died in your pool.
Right.
the parents of the child are heartbroken. Mm-hmm. But the friend of client A, their friend is a lawyer. Mm-hmm. Happened to find out how this all happened. Mm-hmm. Told the neighbor, sue him.
Right.
The neighbors are like, what? Our child wandered over onto the property. Mm-hmm. But the lawyer, knowing insurance law, knows if you do not have a fence, a proper height fence around the pool to prohibit that accident, you, sir, ma'am, client A, are liable.
Mm-hmm. I can see that.
Oh, no, you don't even have to see it. Mm-hmm. It's real.
Right.
And you will be sued.
It makes sense.
You will be sued. Mm-hmm. You will have to pay that claim.
Right.
And unfortunately, because that's more of a liable lawsuit with death, mm-hmm. your policy may not even cover all of what they're going to sue you for.
Oh, I'm sure. Which
then gets into another type of policy, which we will have to do episode C, which is an umbrella policy.
Well, before you get to all of that, because we got to wrap up, I do want to ask one last question, but I need the short answer since we got to wrap up. What are the common deductibles for auto, and what are the common deductibles for homeowners? Because people are so used to 100, 250, whatever. Just speak to that on what are the common ones? How far up does it go?
You can go. Each carrier is different. Just right. so okay. I want everybody to know that all carriers do not have the same maximum limit of deductible. But typically, in auto, typical is 250, 500, 750, 1,000. 1,000 is pretty much the ceiling. But you can actually go as high as 2,500. Ask your specific carrier if you can go higher. Some are higher. Mm-hmm. The producer is making it. He's like, well, it got go as high as 3. Always know what the height of it is, because there is where you may be able to find some monies to put back into your pocket in auto. Home is 1,000, 2,500, or it's a percentage. 1% of the RCE, 2% of the RCE, which will determine what that deductible is. And again, that's probably a place where you really want to look to save some money, because again, most people don't know, instead of using your homeowner insurance to take care of certain things, that's why you have a home warranty.
Right.
The warranty and the insurance are two different things. Make sure you have a good home warranty company, because instead of you having to file a claim with your homeowner insurance, which could possibly raise it, use your home warranty to take care of your appliances and all of those other things that you don't want to use your homeowner, and reserve your homeowner for larger structural things, i.e. your roof. Mm-hmm.
Absolutely. Well, this has definitely been a very enlightening conversation today, and really grateful that you came to share information with us today.
Thank you for having me.
There's definitely a lot that we could have dug into. I'm sure there's endless topics related to auto.
There's so much more, Breanna. I mean, significantly. If we're really trying to educate the consumer, mm-hmm. there's a whole lot of conversations that we need to have.
Right. I got you.
But I would definitely say the best thing to do, have a conversation with your agent. Please. And if the agent won't at least even have a conversation with you, well, that pretty much is telling you the story right there.
Right. Yep. Well, thank you guys for watching today. Again, if you want to reach out to Tyrone Smith, the website is the Smith Firm Agency.
Yep.
Smithfirm.agency.
Yep, Smithfirm.agency.
Yep. He's also on social media as well, yes. On Facebook and Instagram. So, guys, thanks for watching. Please like, share, all of that. Until next time, be blessed. Bye-bye.